All right, there we go. So I should be recording here in several different places. So thanks for joining me for today's webinar. A hectic day in the market. It looks like we're at all-time highs, so we could certainly talk about the market. We'll probably do that at the end of the webinar. If you guys have any questions about some of the option activity or just my take on the market, I'm happy to go over that. But we could do that towards the end of the webinar. I want to get into the kind of the heart of the subject matter. But I thought this would be really good. We've had some new members come in and join. And if you're if you are in that boat of a new member, you probably come into the room and you probably see what's going on. You're like, what the hell's going on a day-to-day basis? I don't really understand, the methodology of the day-to-day flow in Slack and so forth. We've got a lot of great traders in the room, but if you're kind of brought in and you haven't been kind of an experienced trader, there's a lot going on, right? I'm posting all the option flow activity that we see, any of the real aggressive flow that we see, and I'm taking trades here and there, and I try to provide on the private Twitter really some explanation behind why I like this setup. Sometimes it could be it's a name that I've seen option activity in. Sometimes it could just be a nice technical setup. I think it's kind of been probably recently how I've been taking trades is probably about 60% of the trades I'm taking is really just nice setups that I'm finding, either in sectors that are strong and then drilling down to individual names, or just some really nice looking setups. So I'm going to talk a little bit about that. Some of my, I'm happy to kind of share with how I look for trades that in that manner. And then also sometimes if we see option activity, it's a little bit kind of just reinforces my view. A lot of times I do what's known as homework after hours. I don't do a lot of chart study during the day. During the day, I'm doing more of the reading of the tape and seeing what people are buying and selling. And then really after hours, because always the closing print is always most important when you're analyzing the technicals. So if you kind of look at some charts like midway through the day, and you always have to kind of take it with a grain of salt that the setup may not look the same way. So I'll get to the questions. Thanks. Yeah, and keep by all means throw the questions in the chat box. But the chart may not look the way you want it to until the end of the day. So sometimes some certain names look great and then they sell off at the end of the day, and you're like, it's real. That really doesn't meet my criteria for making a trade. So that's why the majority of the research that I do, and I'll walk you through a little bit how I do that. But that takes place after the close. I'm usually at night. I probably do that about 3 out of the nights during the week. I think if you do it, if you look at, there's overkill too, right? I mean, if you're looking at charts every single night, sometimes you get a little bit saturated with looking at too many. So I like to actually, if you let time go by, and then of course the weekend is where I really like to do research, provided that, research, the weekends are for relaxing as well, but I'd love to go through and spend some time and really break down charts and sectors. And that's really where I do my in-depth research. So again, it's kind of, I've been doing this for years. It's just what I enjoy doing. And you really have to, I think, not something I guess that probably comes across all the time, but you really have to kind of love doing this, because I don't think, I know some people who just look at option activity during the day, 9:30 to 4 o'clock and they're done. But they're a different type of trader than I am, and that's really not for me. I like to really kind of get dirty in the details and really kind of figure out not only the particular names, but if particular groups are strong. We've done that. We've done that over and over. So again, if you haven't been a member, that's just what we do. Is we usually get in front of the trend pretty well. I know everybody knows the software names now, but back over a year ago is when I first created a business technology index, because we recognized well over a year ago that there was something going on in software. and it went through a couple mini different trends. Obviously everything sold off in December, but now everybody is looking at Coupa Software and Okta, and really looking into those small cap names. And so I relish the fact that we get to this stuff, we get to these trends way before 90% of Twitter. I would say, and Twitter has some great traders on it, but a lot of people and a lot of option activity is late as well. Sometimes it's good. I mean, it really depends. Sometimes option activity can be really good, especially when it kind of helps you find some names and that you may not have heard before. But that also goes into the research, right? You're like, hey, what is this name? I've never seen this name before, and somebody's buying calls. Let me figure out what they're doing, or let me figure out what the company is first, and then kind of figure out if I want to take that trade. And that's helpful when we see calls, 3 months out. If it's something where they're just buying calls for next week, then that might just be a day trade. All right, so that's just a little bit of an intro to this, and I think I already mentioned, but I'm going to repeat myself. You'll hear me repeat myself several times, but just make sure that you guys are paying for a membership. Any questions that you guys ever have, you could always private message me in Twitter. Some of you do that regularly. Some of you have never private messaged me before, and I always wonder, because one of the first things now when you sign up for a membership, you get a questionnaire. And I know the people who are serious about trading and those who are just, maybe looking to follow somebody for a couple weeks. Those who, who are like half interested, they never respond to the questions. The ones who respond back to the questions with like a whole page, you're serious about trading if you're doing that. And one of the newer questions that I put on the questionnaire is, what are you looking for? What are you looking for to improve? Because really, I think our room is about like using the resources that we have, but really improving and finding your own trades. So it's good. You could certainly use it for both. If you just don't have the time to do the research, that's great. That's what I'm here to do, and to find really nice setups. But all in all, I love it when people kind of learn the process on their own too, and realize that hey, there's a lot of value in being in the room every day. Even if you can't be there for the whole day, but the news that we put and some of the trends that we find, I think you kind of get that by being in the room every day. But by all means, always ask questions, because I've been doing this for a long time, and I don't think you're really going to find, and I'm not trying to brag at all, but I don't think you're really going to find too many traders on Twitter or who manage a trading room who've got institutional experience like I have. I mean, I used to trade the biggest orders that are out there in the ETF world, and I also used to do wear a lot of different hats. I pretty much traded every product that there is on an equity trading floor, also including fixed income, right? I mean, there's not a lot of equity traders who've actually traded fixed income, and I used to do that because of course there's fixed income. There's bond ETFs out there, so I had to use, which we love to do. It was like, hey, let me learn something new, because I never really traded fixed income. So I used to trade, to hedge big orders of HYG and TLT and IEI and those things. I used to trade Treasury futures, so to help hedge with those orders. And I think that's what we saw the other day, by the way, with that big TLT order. Was probably the way that they put the print up on the tape. They were probably hedging with Treasury futures to access the liquidity there. All right, so that's enough of an intro. That's me. I'm sure you guys are familiar with me or seen me. But so let's get into. Will you be sharing this PowerPoint after the session? Possibly. I don't usually do that, but I shouldn't have a problem. Definitely will be sharing the video, which I'm recording now in 2 different places. Our options. So let me go through as I see some of your questions. Position size. I'm going to get into that. Option flow posts are intended for triggers. Yeah, so I'm going to hit all in chronological order, but by all means, keep throwing questions in there, and I'll get to them all. And of course, if I don't get to any of the questions, just repeat them, and I'll happy to. So what am I doing day to day? What's my day to day routine? Well, I'm looking for the best setups, and I use that. I try to get the best setups, just as I mentioned. Technicals. I'll go through briefly. I don't want to go through the value areas and so forth. I'm going to be doing a webinar tomorrow, which I'll send you guys the link for at 12 o'clock, all on the value areas. So I'm not going to spend that much time there. But technicals, I do a number of scans. I'm happy to go through FinViz. FinViz is very inexpensive, even if you're looking for, you could use it for free, but you could also sign up for a yearly membership, and it's not expensive. I think it's at most, I think, a couple $100 for their premium. And the amount of time that FinViz, remember, one of the things in any job, but especially as a trader, is just to maximize your time and to automate as many things in a process that you possibly can do. And FinViz allows me to, do scans on anything and quickly, like even if you're watching on Sunday night, if you're watching Billions or Game of Thrones, which are now at the same time, which is difficult because it's now 2 hours of TV, but you can literally like go through FinViz scans while you're watching, and you kind of have one eye on Game of Thrones and one eye on just going through charts. And after a while, you get so familiar with what you're looking for, you basically can just scan very quickly through pages of charts and know what looks like a good setup to you. So I'll go over a little bit of that. Option activity, we'll go into some details about how I use option activity. A lot of people use it different ways. And I'm going to say this throughout the presentation. There's more than one way to skin a cat, right? So there's a particular way that I do things, but it's not the only way to do things. I just have learned through a lot of trial and error and a lot of practice what works for me. But it's not to say certain and other types of trades are not going to work for you. Part of this game is developing a comfort level and getting very confident with your own style and developing your style. So just following can get you, to the beginning, but you really want to figure out what your own style is. And I've noted, when I first tried, when I was kind of out on my own after I left the institutional world, I was trying a bunch of different strategies, and I noticed what a couple people were doing, and I'm like, oh, maybe if I start to follow what they're doing. And after a while, what I learned is my patience level, my psychological level is different than whatever trader that you may be trying to follow. So it's not going to work the same, right? Everybody has a different risk tolerance too. So all these things, all these factors go into your own trading style, right? That may be different than. So it's very difficult to just kind of follow somebody's trades. The other thing that I think is very beneficial is just information, right? So looking at the option activity or looking at the trades that I send out on private Twitter. Not everyone may fit your trading plan or your scheme, but you can evaluate that, and if it hits your system, then of course I think then it makes sense to follow if you like that trade. But you'll get that repetition after a while where certain things agree with you and certain things don't. Just like everybody posting trades in Slack or different charts, right? First of all, there's no way that you could take every single trade that people are talking about in Slack. So it becomes a major like filter that you're filtering all this information, and that's kind of the way I do it. Is just filtering a lot of information and figuring out, like in that, like if you have this. I'm sorry, I don't have any visuals here because I stink at PowerPoint. But if you look at how a filter is, right? It's on the top of it is the widest part, and then then it funnels down, right? Or it's like a funnel, right? Even like a beer funnel. And then so that you want to basically filter all that information, trade ideas, charts, and so forth, and pick the ones that you think are fit your system. And that's what I do on a day-to-day basis with information that we're seeing, whether it's news stories, upgrades, downgrades, the option activity, charts, so on and so forth. All right, and then probably this one is one of the most important ones. I'm trying to highlight, but it's not doing it. Keeping balance, right? With all that information that we're seeing on a day-to-day basis, you have to figure out your trade size. Um, how many this should be positions, like how many positions are you going to take? Or I should say quantity of positions. So maybe position quantity should go here because that's important too. So I'll get to that. So this is just a quick overview, then we'll get into the nitty gritty. Options versus stock. You'll see me sometimes take, there was a good question in the room today too on JD. They said, why did you take stock in this? So I'll go over a little bit about that versus options. And then very important, you'll hear me say this a lot. I'm not a professional poker player, but I know the basics, right? And I know, even very reputable firms like Susquehanna, a lot of option firms out in Chicago. Sometimes you walk into these places and they have a poker table, and they will actually ask, or in their interview process, about if you play poker, and they may actually make you play poker for a little bit because there's some really good uh, points, just like in sports too. I like to use a lot of sports analogies too, but poker's very good. I mean, if you've played poker for a while, or if you're good at poker, you know that playing the best hands are what you want to do. So that also comes into play with conviction, which I'm going to get into as well. But if you play every single hand, if you play every time you see option activity, the results may not be so good. All right. So that's what I'm doing on a day-to-day basis. That's a very high level. So setups. Well, let's talk about the setups that I'm digestions, not digestions. So what am I looking for in a lot of the technical setups? First, I'm looking for a lot of times, like Netflix. I thought was interesting, and I'll bring up charts as we go along. What happened to Snap? Snap came all the way back in. I need Snap to stay above 1250. But Netflix, right? So this is a good example, I think, for the day. Now, Netflix kind of gave back some ground at the end of the day, but I think this happens to a lot of beginner traders, right? Meaning, and I'll back this up with a little bit of explanation, but Netflix has been going, it had this big move up in the beginning of the year, which is kind of distorting its year to date performance, right? Because the majority of the gains were all made like in the first couple of weeks of the year. And then after January 15th, it basically has done nothing, right? It's gone sideways. It's been from 358 to where it was the beginning of yesterday. So it's gone nowhere in 3 months. So all of a sudden yesterday, it starts to move, right? It's up. It was up 4%. And I know, like myself included, I'm like, oh, geez, miss Netflix, right? But what am I? But you have to ask yourself, what are you looking for? Are you just looking for a day trade, or do you think something bigger is going to happen in Netflix? For me, and it's tough because we all want to get in there as quickly as possible. But I think Netflix, and that's why I put on. I did not put on a small trade. I did not put on a huge trade, but I put on a small trade in Netflix, thinking that this could actually get up to maybe 410ish, 420, and that's the kind of move. And I think coming out of congestion, names have the ability to do that. Once names have been sleeping for a while, like this Raytheon that we had in the weekend newsletter. One of the reasons why I was looking at it is because I was like, I think eventually this thing is going to start to move, and sooner than later. So I would be looking now. It does have earnings on Thursday morning, I think it is. But I love names that start to move out of consolidation, right? They're coiled, right? And a lot of people, what they do is they take they measure the move of how long it's been in a base or in a sideways pattern, and then they extrapolate up, to where it could possibly get to. Now, Raytheon has a $200 VPOC up here. I mean, why shouldn't it be able to get up there? So yes, today I missed a 2.8% move, just because the thing already gapped up on the open after Lockheed Martin, and I started a small position at the end of the day. I did not send it out on private Twitter because it's just too small of a position, and I don't know what I'm going to do with it in 2 days for earnings. So it may just be a trade for tomorrow, but sometimes things get a little bit difficult when you have earnings right in front of it. But it's one of my favorite setups where we're in the names in congestion for a long time. Then a lot of times these names, once they get out of the range, they really start to move and pick up momentum to them. Certainly I think Amazon did that a couple different places. And it kind of brings up my next favorite setup, is a check back to support. So names that are in uptrends, right? Like we saw this Amazon finally start to get. So here was the initial draw that I thought for Amazon, which is why I've played this, many times in the last few weeks, is because it was in this pattern for, at the end of the year. So basically, what, 2 3 months, Amazon was going sideways. Now again, it didn't go up in a straight line, but since it got out of this range, and if you even draw back from before December, it's really been going in this range since all the way in October. So now it finally got out, and look at what it's done since then. So yeah, I like to, now I know Amazon reports in a couple days, but look at the move. So if you miss the first day of it getting out of range, which was probably here on 318, look at the move since then. That was at what, 1730 bucks, and it's now $200 higher. So keep that in mind. One of my favorite, I'll just give you one example, one more example of that. Paycom. I remember, one of the guys that I like on Twitter, and we had a nice trader get together, which I want to do again. But one of my favorite tweets that he sent out, and he seems to always get heckled on Twitter, but he was looking at this Paycom setup, again, another software name, and he sent this out on his Twitter feed. As he's a very generous person on Twitter, always sends his setups. And the name did this, was up huge out of this line, out of the downtrend line. And so it was up 3 or 4%, and he says, boom, trade triggered, and coming out of a downward trend line. And a couple of people asked him about him, and I remember one person was like, "Oh, well, I'll try to get in if it goes down." And again, right here, the first signal of a break of the downtrend. And I was like, "You have to be kidding me!" And I came to, not that Anthony needed my defense, but I told the guy, I'm like, well, I hope it doesn't go down because it kills the trigger. And and the guy, I don't think, understood. So anyway, this is just illustrating that sometimes you feel like you miss a trade, but the trend could just be starting. And this Paycom was an exact example, and I love this one because people on Twitter were like, oh, well, maybe if it comes back in. I'm like, if it comes back in, it ruins the whole signal of getting above the downtrend line. And look at what this thing is. This was at 127. So I don't think that person on Twitter ever took the trade because they felt like they were chasing. And I think that's kind of the wrong way to look at things sometimes. But this was at 130, and it made a move. I mean, now the thing's up to 195. So what, you were going to wait for it to come back, and where? So again, that's the kind of style of what I'm looking for. A day trade, if you happen to catch that day trade on, January 15th, and you feel like a hero, that's great. If I can get into something like that same day, that's great. But really, I'm looking for the signal and for confirmation, right, to get back above. And the value areas really help in that situation. But anyway, you could Google that day, Anthony, what's it, Massaroni, I think is his name. I'm not sure how to pronounce his last name, but you could Google his Twitter handle and Paycom, and you could see when he put this out, and the analysis that he did, which I thought was great. But so anyway, so that's why I went into Netflix today, because I think it has a greater move. But I think that's a great example of what I'm looking for. Also breakouts, just something where we had a great example. I think Robert did this one. If it wasn't Robert, correct me. But LYV was a good example too of a breakout. Some digestion here, and you're out to newer highs. If you're not familiar with Yeah, sure. I think it's let me see if I can find him on Twitter. But again, you just have to put in the this person's name. But I mean, if you're not familiar with the reason why names hitting 52-week highs are so nice, and names that are breaking out, is because you have no overhead resistance. And I think it's either William O'Neill's book about breakouts, or I mean, there's a lot of trying to think of it. There's another book, but these are all like mandatory books that I would be reading. Teaching you about breakouts, why breakouts are much better than trading names like down into here. Because breakouts, it's basically you have no resistance, right? You're taking so much out of the equation, and you should know when, if it's a failed breakout, when to kind of get when to get out, right? Sorry, I'm trying to multitask, and now is not the best time to do it. But yeah, if you bring up this guy, but it's just Anthony Masseroni. Great follow, great swing trader, long term for long term swings that he puts out there. But if you put his name in and PAYC, you should eventually be able to find that conversation that we had. So yeah, and then the waiting for the comfort. So a pullback into support. I don't know which one could we use for this one. Maybe even Zscaler, which I got out of today. But a name that kind of comes into the 20-day moving average that does a little bit of a bull flag. It's probably not the best one. AYX, that one I haven't put back on. What else do we see? Oh, Okta maybe. By the way, what a beautiful breakout in this thing today. So, something like this, where it checks back, breaks higher, and then it checks back to the 20-day moving average. I love these setups. Those are one of my favorites, right? And a name that keeps rolling higher and higher and higher, even back here, I think for earnings. And we did this a lot for these names, these software names that reported back in March. They all sold off initially, and then they found their footing, and then they grinded higher. And look at this thing. We did that with probably 3 or 4 different names, where I kind of waited until after, and again, the name for me, they've got to report good earnings too. But like Okta, Coupa Software, they all beat and they raised. It was just the fact that they ran a little bit too much into their numbers. I think Twilio was a good one too. I think, did Twilio finish down on the day? But I think this setup still looks good. It's just tough with Twilio because it's such a high price stock at this point. But got a little bit extended here. That's why I always look at the 5-day moving average with the 20. Usually when this gets extended, usually they come back and meet one another. But this was pretty good. We did play this one a couple weeks ago. I just got out probably somewhere in here. I think I got out and added someplace around the 50-day moving average. So you'll see me play that setup a lot. All right, so that's some setups that I look at. The studies that I use, again, I'm not going to go into detail because that's a whole webinar, but I use the market webs. I find them very, very useful. If you're considering making that purchase for the market webs, you could basically sit and watch what people do in the trading room. I think that's kind of the best way to learn. And you could kind of tell from the way that people use it. I would never sell anything that I didn't particularly use. I know a lot of other jokers out there will just like sell an indicator of the month. I call it an indicator of the month club, where they're like, "Oh, this is the best thing. You're going to make huge potential profits." By the way, as soon as you hear potential profits, I would immediately exit the room. That's not a trade. That's not a term I will ever say. Oh, with this indicator, you can make huge potential profits. Immediately run, run the other way. So anyway, I'm just being funny, but I really we haven't had a new release in the market webs. Eventually, maybe we'll try to do that, but I want things to work. and I want to be able to. I don't want to leapfrog into the next indicator. I want to refine what I'm doing and kind of tweak it, right? Not just look for a brand new indicator that's going to help me. So I use the moving averages a lot because, listen, that's what everybody else. A lot of traders use them. I think they do several good things about the indicators, and I know some people don't like them, but I use them for good support and resistance. An area to kind of put a trade, like I mentioned, the 20 period moving average. So I think they work great with the market webs. I know Web doesn't use them, but that's fine. But when they converge, a lot of times, like I see the top of value, like a check back to the top of value will coincide with a 50-day moving average. I'm like, oh, that's perfect. And then, lastly, I'll use the MACD as kind of confirmation. I'll use the RSI to see if things are overbought. Like the Qs right now are really overbought. From the RSI. What is this now? We're over an 80 RSI. So when these indices, for me, now again, everybody's different, but for me, when the indices get over 70, I want to be a net seller. When they get 80 to 80, I don't really want to be putting on any new trades, unless it's a small type trade. I just think that when they're overly cooked like this, they're due for a pullback, or at least digestion. So I just don't like to mess with that. Especially the stocks can get more overbought, right? They could stay overbought for a long time, but the indices, they usually don't stay overbought for that long, at least without ducking back in. Now, we were 73 here, and we've continued. We kind of came in a little bit off those overbought levels, but I think this is pretty. You could see the last time here was where we got overbought, and we did have a sell-off after that. So again, it doesn't mean we're going to get a sell-off right away. It just means that we're really overbought. And we could come in, a little bit and then get overbought again. That's a great sign, by the way. When you do get get a little bit extended on the RSI, and you come back into like a 65 RSI, and then you go right back to overbought again, some really big strength. What is SPY? SPY's a 73 as well. So that's the most overbought it's been since the recovery back in the end of the year. Again, here was an example, right? Where did we get to last January? We got to like an 87 RSI, and look at what happened after that. Right, so we got too heated last January. Now, of course, there was also that's when the trade war basically started, but that's still crystal clear in my mind. All right, so that's that. Yeah, I mean, a setup with the market webs. I'll go back to Berkby, which was what I talked about on Bloomberg. Bloomberg does not have the value areas, but I think right now Berkby is trying to break out on the weekly chart. We'll see. It did not close above value last week. It got really close to it. We'll see if it closes above this week, Berkby. But that's also, using the value areas, and especially the whole year value area. Because what will happen here, if it does manage, let's say that by the end of the week it gets up to 213, right? Then I know exactly where to get out of the trade. If it happens to sit back inside value, then I know where to get out. All right, so we've gone on here for it's already 10 after 5. So the technicals is a big slide. Scans. I talked a little bit about this, but FinViz, right? I use FinViz. I talked about maximizing, what you're doing, maximizing your resources, right? And try to automate your systems. So a couple different things. The way that I use FinViz. Is anybody not familiar with FinViz, or does anybody have any questions about it? If they've never used it too, you can mention that you've never used it. But it's a great way to go through a large number of stocks quickly. So I use a couple different screens, one of which I build watch lists. So you could see that I've got all this. So for example, I've got all the Chinese internets in here. So I could pull up If I just want to look at the Chinese internets and how they're developing, what did I enter? JD today. Oh, so JD is a good example for technicals. I always mix up this and the Thinkorswim icon. But so why did I take JD today? JD has been a name that I've been trading in and out. So first of all, the weekly chart, it's still in value. Notice it got into value, and it's kind of retesting the bottom of value. So I like that. I like the fact that, and like I said, I've been in JD.com a couple different times in stock, but it's up to 30. There's a 3250 VPOC up here. So notice it did this nice break out of the 200-day moving average, and it's come back and it's been retesting the top of value. It didn't close on the highs today. But this way, if it doesn't work, if it slips into value, I'm out. I'm out of that trade, which is where I put my stop price on the alert that I sent out. But I think it's digesting a good move. I would have liked to see it close on the highs for the confirmation. But I'm shooting for this 3240, 3250 VPOC. I scan, so I'm going to go through. So I've got the watch lists. So I've got Chinese internets. I've got all the software names in here. I've got all the energy names in here. I've got all the healthcare names. So I'll just sometimes, at night, one of the things I'll do is I'll go through all the software names. That's how I found Intuit last night. I went through all the software names, and Intuit was the one that I really liked. I don't know if anybody took that trade today or started a trade in Intuit. Oops, where did it go? But I thought that was a really good setup. Intuit. Yeah. So it came, Finviz uses their trend lines as well, which is nice because that's something that I don't have every trend line drawn on mine. But what I do is from here, I'm like, Intuit looks interesting. And then I bring it up in my charts and I say, does it look interesting to me? And I noticed yesterday it closed back above value. And this was a name, again, it's kind of same thing with some of those other software names. It had good earnings. I believe it had earnings already, didn't it? Or maybe I'm thinking of tax season. But it made a peak up here at 272, and it's been settling in and digesting right into that 20-day moving average, and it climbed back above the 20 and above the top of value. So I thought Intuit was a really good trade for the day. Sure enough, it was up 1.5%. And then also it saw option activity. So again, you spot this stuff. If you do your homework, somebody came in at 2 o'clock today, right? Probably noticing the same thing that I did. Or I don't know. I don't know why they would buy in. You never know the underlying reason why they're buying calls. But I don't know. It looks like a great technical setup to me. Do they know anything on that? Probably not. I don't know. It's pretty short term in nature too. But they bought the May 3rd, just a couple weeks out. Maybe looking for maybe looking for this to get back to the 52-week highs. To me, if I had to guess, I don't think they know anything. I think they know it looks like what I know. It looks like a really good technical setup. But if you're already in the stock, and I'm going to talk about this in the option activity section, you're already in. If you got into it in the morning, and option activity comes in, and then you have 100 people talking about how there was calls into it, it's going to give it a little bit of a kick momentum, right? It's like when the Nigerians mentioned at a halftime. You want to be in it before you see the option activity, in my opinion. That's my goal anyway. Because again, I think half the option activity that we see is just names that look really good technically and are starting to move higher. So that's the majority. I'd say the 10 or 15%, a small amount, is they actually know something. And I know there's confirmation bias because you never have anybody tweet the losers on Twitter. So you only have people, they knew. How did they know? Like with Qualcomm. Sure. I mean, there's gonna be ones where they know. There's no doubt about it. What's the percentage that they actually know something meaningful? It's probably pretty small. And again, the reason why I say it's pretty small is because I've played this game for years. And I used to go after every time. Oh, every time there's aggressive option activity. Oh, they must know something. And then you watch your calls that you bought for $1 go to zero. Yeah, they didn't know anything. So, anyway, we'll move on in the presentation. So watch lists. Yeah, I mean, so I'll go through. So these are all my obviously watch lists. But if I want to just clean this out, I'll just click on a different tab and then go back to screener. And sometimes I want to go through, and you can make sure you put this to all, so you get all the fields. Somebody showed me the other day that you could just do candlestick patterns. Like if you're just looking for hammers, you could do that. Which I didn't know that you could do that. I think that's a new field. But if you want to do, let's say, new high list, notice how many different fields you have this. But you could do new highs, right? And you get a list, and there's going to be a lot today, I would think. 17 pages. And then if you want to look at the charts, you could do that, and you can filter this down a little bit. You could make sure the price is only above 10 if you don't want to look at the penny stocks. Volume, I usually put average volume. Where is that field? Over here, above 50,000. This way you're limiting how many names. Now how many pages we got? Now we got 11 pages. So I just took 6 pages out by adding in a volume criteria and a price. But yeah, I mean that's good. And then you can also do, if you may be able to do this with for free, but if you want to like download this into Excel, which I think is beneficial, because you could see like how many names in. So if you go back to portfolio, and you can create new alerts this way. But if you go back to the screener, there is a place somewhere where you can download to Excel. I just can't find it right this second. There's a way to do it. I just can't kind of find it. But that's nice because I'll go through and I'll look to see, oh, is it financials? And I think you could actually sort here too. But you could go through and see what particular sectors are, because sometimes you'll see it's all one group that's making 52-week highs. So I think that's important as well, to see what groups are doing it. But so what else do I do in here besides looking at new highs? You could also look at, especially after we've had a correction. I'll look at names. What names are above the 50-day moving average. Obviously, it's a lot more. It's too many pages to look at. But those are all things that, depending on the market circumstances, you can kind of change this around. One of the things that I like to look at as well, and I'll put the price over. This is a nice screen to run. Price over $10. Volume, again, I want to have over 50,000. Again, that just weeds out so many names. But if you put your EPS, so if you want to look for your names that are continuing to grow, have got really good growth. So you could do EPS growth this year or quarter. I usually do quarter over quarter. Then you do over 20%. You could also do sales growth over 20%. Right? How many pages did we get? We got 18 pages. So believe it or not, that doesn't take you that long to go through. It'll probably take you about 10, 15 minutes to go through. That name doesn't look bad. OMP, I don't know that name. But that jumps out to me like once this thing gets going, that might be interesting. What is OMP? So again, what I usually do is once I find a name that I'm interested, I'll usually look to see how it's in and the valuers. Now this is not a name. It's an energy name, Oasis Midstream. But normally, so let's say that I like the name, and this is a name that I might want to trade. What I then do in my process is I set an alert. Now this is a little bit far away from the top of value, but something like right around 2090, then I don't have to watch this name anymore, right? I can kind of, if the alert never goes off, then I don't need to really pay attention to it. But 2090 would be my breakout level, breaking out of value. Notice how the next month value area is really, really tight. So then notice this thing is really coiled. Kind of an interesting name. But again, that's how I do some of my um, idea generation, is going through and looking through these charts. And so every once in a while it'll be like, oh hey, we just saw option activity in this name, So then a light bulb goes off as well that somebody else likes it besides myself. But again, it doesn't take long to go through. And very quickly. This KL looks interesting. I know somebody came out with a negative note on this today. This thing was what you're probably the best of the best gold miners. Just did this huge ramp up. I tried trading this when it checked back in here to the 50-day, and it broke, and I stopped myself out, which is a good thing because it's much lower than where I stopped myself out at. But I tried this one. But yeah, this one's tucked under the value area, so I don't particularly like it. All right, any questions about that? But yeah, it's the looking at the watch list as well as just it's good to look at new names. So I like both looking at my familiar watch list, and then I also like looking for names that have not been on my radar. And you could do this by doing this EPS or sales growth. And you could set this to however you can obviously play around with these criteria. If you want more names, you set it to over 15%. And I usually do both EPS and sales. But if you just want sales, you could do just sales. Make sense? Any questions about that? But yeah, so again, it's a multi-step process. It's going through the watch list, going through this criteria, and then going at night, like setting up alerts. And I do that in E-Trade. And that's a great way to kind of catch moves. So sometimes when we're in the trading room and we're like, hey, I got an alert on this name, it's not just like I don't just say, oh, this name's it's up 4%, it's up. No, it's usually it's a particular trigger that I have set for my alert. So when you see me say this name is going up, I'll usually tell you, I'll say it's at the top of value. So I don't know, what was the one name that we were looking at? OMP or something? I'll usually say, well, this name's at the top of value. It's breaking out. Speaking, what did Square do today? So I had an alert on Square and it never went off. Such a tricky name this Square has gotten. But I have an alert, for example, on Square that I set pre-market on an entry into value, and I never got the alert today because it never got there. But again, that's how the value area is. That's resistance. So why am I going to play it here when you got resistance right in front of it? All right. Scan. So I think we went over watch list. Yeah, so you could do the moving averages, whatever's above a 50-day moving average, growth, sales, earnings. Any questions so far? We're about already 48 minutes. I talk, it's a lot of details. So I'm sorry, I don't mean to do have webinars that are that long. But it's a lot in the process. This is not. I wish I could say I just come in every day at 9:30 and watch option activity. That's really only probably about 25% of my process. Okay, so let's get. Were there some questions about? There was a couple questions about option activity. So option flow posts are intended as triggers to investigate the underlying technical and fundamentals in order for an individual trader to make informed trading decisions. Yeah, that's kind of how I use it. And again, like I said in the beginning when I did the overview, everybody there's a lot of traders that use option activity differently than I do. That's how I use it. A sweep means that it's just an aggressive buy. When we see something either in the cash market or an option, and it says sweep next to it, they're basically they're there's multiple exchanges that are putting out bids and offers. When you see something that says sweep on it, they're and I'm happy to give you an example, right? So when I was a market maker, or when I used to, I didn't a market maker post active bids and asks. I never did that. What I mean by market maker, I would help facilitate hedge funds do their trades for ETFs. So basically, hedge fund XYZ would call broker ABC, which was me at Merrill Lynch, and they would say, show me a market on 2 million shares of XLF, right? So you have to be a full time member for Slack. So if you're not a full time member, then you won't be getting in. But if you're a full time member and you don't have access to Slack, there's an issue. So you can email me. You can just use my regular email, cfromhertz@gmail.com. But there should be, if you're a full time member, you should have access. Part time members do not get access to Slack. So XLF, right? Let's say XYZ trader, XYZ fund says I want to buy 2 million shares and I want to buy it right. Show me an offer. I want to buy some. So something like that, the broker has to make a really tight price. If not, they will go someplace else. They'll hang up the phone and go to Goldman, Morgan, JP Morgan, Morgan Stanley. So if I want the order as a broker, I've got to make a really tight price. So let's say right now, closed at 27.43, but let's pretend that the market is open. Okay, then email me. You can email me and we'll discuss it. If you don't have it, you should. Um, but let's say the market was open. I would make that, I would say, like a penny up. So you could buy 2 million shares of XLF at 27.44. All right. And what I would do is as soon as they said I buy, I would go ahead and I would set my alert in my much more sophisticated trading system that I would have as an institutional trading trader. And I would say I'll buy everything up to 27.45. Right? So if I set my limit to 27.45 and I try to buy 2 million shares, I'm sweeping 2 cents above the current offer, right? I'm taking out all the prices all the way up to 27.45. Now that trade, let's say that there was liquidity there, but not as much as I wanted. So let's say I got filled on 1.8 million shares, so almost all of the 2 million share order. That order would be marked sweep on the tape because I went above. And you do that, I'm sure, in your option positions. Your option positions, even though they don't hit the tape over here, if you're unless when you're trying to buy something, you're bidding mid-market. But let's say you wanted to buy like these Intuit calls, right? And the market, sorry, this is a long-winded explanation, but it's important. The best way I can explain it is with real-life examples so that you get it. But let's say that you wanted to buy this week's 267 and a half calls into it. The market's 370 at 420. Now you could try to bid in between there. So again, 370 at 420. You could try to bid $4 and try to get $4. But if you really wanted to get filled, to assure yourself of getting filled, you maybe put your price at 430. Now you're basically sweeping above the offer. So why would you do that? You're ensuring yourself that you're getting filled and you don't mind spending 10 or 20 cents more. Why is that important? Because you have conviction for doing that. And that's why it's important when we look at the option activity. When it says sweep, it's somebody who had conviction, right? They're aggressive. They wanted to get done. They didn't want to pay mid-market. They weren't willing to sit mid-market. They wanted to get done right there and then. Right? So that's a big difference, right? And you know that when you're trying to buy an option, what you pay. And sometimes you'll get a fill actually that's better than the offer. because there's like hidden, there's hidden markets that you don't see. But yeah, when you do that, you're sweeping. So you kind of it's a process of elimination. When you see sweep on the tape, it usually means it's bought, right? Because sometimes trades go up mid-market and you don't know if somebody's selling or if somebody's buying. But if you see them go above the offer to buy, you know that they're doing it aggressively. They have conviction, and you're probably 90% sure it's a buy. Right? Does that make sense? It's a good way to describe what a sweep is on a tape, because I do it all the time. So yeah, we already talked about this. I personally like to get into a name prior to option activity. That's kind of my goal. I think it's a much better setup when you're already in a name, and then all of a sudden all kinds of call buyers come in. Much of it is momentum based. So I'm very picky, right? Now, I mentioned that there's a bunch of traders that use option activity differently. Some people just use it for day trading, right? I will do that every once in a while, and I'll try to mark something, and I'll say, hey, this is going to be a day trade. I'm going to be in and out of this. It's a short-term trade. But for the most part, I'm only going to take maybe one of those trades. I'll limit myself to maybe one of those trades a day. Like I took sale today, which didn't do anything today. Right? I thought this was highly unusual. So this was my one trade that I took today. That where I saw option activity, something I've never seen before. Sale May 30 calls go up for 90 cents. Notice it says sweep opening. So these are all the things that go through my mind. Is there open interest? Nope. It's an opening trade. Most likely it's bought. Could they be buying it for earnings? Sure, they could. They have earnings on 5/8, but maybe they're looking for a run into earnings. Maybe there's a reason. Maybe there's a reason why they want to own it here. Then I go to my charts, which is all in the process. Does the chart look good? Yeah, it looks pretty good. It's kind of been sitting here at the 200-day moving average. It's not extended, so maybe somebody's thinking that it comes out of congestion. And I looked at the company, not a name that I've never traded before. So also what goes through my mind is, well, hey, it's short term in nature. Am I going to put a huge position on here? No. Why? Because I wasn't able to get out of it today. It didn't work. So I put on a 6 lot today. I added a couple, so I've got an 8 lot position on in sale. Very small position. But that's personally the way I think that my system tells me to do it, because it's short-term in nature, right? And I'll get into a little bit about that. I get questions a lot because I say statements like, hey, I don't want any more May. I'm not looking to put on any May positions unless I see something really unusual like this. But if you put on a May position at this point, front month position, you have to be okay with losing all the premium. Because if this thing comes in tomorrow and it gets downgraded for whatever reason, right? Some bad news, or the market is just weak, that 90 cents of premium will go down to 30, 40 cents like that. So you have to size your position appropriately, knowing that this option position is going to could have the possibility of doing that. Now it could do something really nice too and go up to $1.50, no problem too, if it gets upgraded. Right? And that's kind of the game with front month option position. But over time, I've learned that, hey, if I'm going to trade weeklies, or it's just basically the same thing for front month, you really have no recourse if there's any bad news. If there's bad news, your option premium's gone. And I think some beginning traders, I've had a conversation with somebody the other day who was just trading weeklies. I'm like, you're kidding me, right? Well, first of all, like if you're trading weeklies or May at this point, front month, that's not swing trading, right? That's like you want to be in and out of that name super, super quick. So that's probably the most. I don't know why I held on to this position actually. I just figured I'd give it a day, but usually you don't see me do that. It's a $900 or $800 position. But yeah, so these are things that, that's going to be the next slide. But yeah, the option activity for me, so I'm very, very picky with following, Because again, on Twitter, nobody posts any losers. Like, I'm not trying to call anybody out, and I won't do that. But the Nigerians, I don't think I'm bothering anybody by saying the Nigerians. But now FCX reports tomorrow, so this trade could work. But they got all bulled up and on CNBC and talked about all the FCX calls, which, by the way, was just a roll of calls. But this was here. So again, no, you don't hear a peep about anybody talking about option activity right now in FCX. Now again, that could change if they have good numbers tomorrow. Then all of a sudden, everybody will be doing victory laps about the FCX calls. But this thing has gone down to basically $1. It's gone down. Yeah, I mean, it's gone down almost 10. It's gone down about 8% since option activity. So this is how I know option activity. Some work and some don't. But yeah, if you got into this position because everybody was so bulled up and said, oh, they scrambled into FCX calls a week ago, the stock's down 8% since the option activity. So I'm very realistic when I see people get all hopped up on option activity about how it's, the holy grail. It's not. And especially, right? Think about it this way. The whole market is going up right now, and it's gone up, right? So what option trade isn't? They should all work, right? I mean, if you're somewhat disciplined, they should all be somewhat working. There's not many names. If the majority of the market, now again, the S&P is the majority of the market. There are still names that have fallen down. I mean, look at the steel names, for example. That hasn't worked. So it's not 100%, but people don't realize too that yeah, they're buying calls. Well, the whole market is going up too. So, you could have bought almost anything. So I don't know if it's that statistically relevant, is what I'm saying. But we could go through a list of names that people. What happens is, and again, I'm very judgmental about this stuff because hey, it's money, and I don't like how people deceive one another. But what happens is, you'll see a lot of different guys, and again, I'm not naming any names, but they'll tweet 20 different symbols. And then the 5 that really work, you'll hear them tweet those 5 over and over and over. Well, what happened to the other 15 that you tweeted out? You just don't see anybody tweeting them out anymore. So that's a lot of times how it works. And it's really, I think, messes with people's minds that they'll say those couple names and you just never hear them again because nobody tweets losers. Nobody said, and I tried to do it with, and people get mad at me when I say, well, this one didn't work. You'll never hear that person who originally tweeted it mention it again. It's like Gone with the Wind. When an aggressive option trade that we see on the tape doesn't work, nobody repeats it. It's like it never happened. So anyway, I spend a lot of time on that because I don't want to deceive anybody, and I want you to think about these things realistically. Thank you. Yeah, I mean, I'm just realistic. I'm not trying to sell anybody on option activity. That's just stupid, in my opinion. And I don't know why. Some people, I swear to God, they would rather see good option activity than the trades work. Like, oh, yeah, great option activity today. Well, or I also see people say when the market, because literally I'll put together a list every day. Maybe there's a small difference. Like today I thought was a little bit more aggressive, probably more signals than we saw yesterday, but not that many. But this is the other thing I see people do. When the market goes down and there's the option activity was bad. Oh, there's nothing going on. Really? There's calls bought every single day in something. So again, you have to be very picky and choose. It's like a comedy act. I really think it's a comedy act. But anyway, it all depends. Bottom line is, I go off tangent all the time. Sorry. It all depends on your style. Since I'm more of a swing trader versus day trader, I pass on a lot of names like DBX. So here's also gets into the next bullet point. If I'm going to sit in a swing trade, I kind of have to like the name for more than option activity. Yet yesterday we saw calls, and these were good trades. I mean, some of which happened a little bit after the initial move. But Dropbox, I don't know what this name did today, but probably around 10:30ish, we started to see calls in both Box and Dropbox, and it had really good follow through. So why didn't I take those trades? Because I would rather play other names than Dropbox, to be honest. All right, I think this was right around here, probably where we saw calls hit in DBX. I'll bring it up. So it just doesn't fit for me. Again, not to say that I hope somebody played it in the room. That's great. 1055, 1057, 1055. So again, the other thing people do is they don't foot it to the price. So 1055 was around here, right? So you had to be willing. Now it went up further, but this is when the calls started to pile in after it was already up. So see what I mean about momentum? Like, I don't know if anybody knew anything on DBX. I don't know if it was just, hey, everybody's buying DBX. Let's all buy DBX together. It's momentum. But I wasn't willing to chase Dropbox. Maybe if I saw the Dropbox and it was here, hey, that's interesting. I haven't seen Dropbox. Maybe I'll play it for a day trade. If it's already up 2.5%, I think it did end up like 4 or 5%, yes, maybe even more. Oh, I don't have Bloomberg up. But yeah, I mean, you could have made some money on this, but you would have had a chase. And there's good chasing and there's bad chasing. And a name like Dropbox, I don't know. To me, this chart doesn't jump out at me. It's a lot of sideways. It's been moving sideways for a while. Same thing with Box. I think there's just better software names to play. So again, goes in my filter. Trust me, I look at them all. Boxes below the 200-day. If you're a software name right now and if you're below the 200-day moving average, there's probably a problem, right? Considering that the whole group has been crazy nuts. If you're a software name and you're below the 200-day moving average, there's probably something not right with your company or your product. Right? Does that make sense? Some people would maybe say, "Oh, well, it's a value play." Well, how long are you going to hold on to it? Right? So then it goes back to, and I wrote a whole paper, a whole blog on conviction. I've learned over time, I really need to have conviction because let's say that like this sale trade that I mentioned, what's my conviction in it? 1 out of 10, probably a 5, right? It's not a name that I've studied and it's not a name that I've researched. So what's my conviction? It's probably pretty low. I know the group. I think the chart looks good. But I'll tell you, the minute that DBX, let's say I took the DBX yesterday and the name didn't go up, I probably would sit in that for about 24 hours and be like, I don't want to be in Dropbox. It's an underperformer. Right? So these all go into my criteria of whether or not I take a trade. Any questions so far? We covered a lot. There was a question before. Yeah, I think I answered that question about how I use option activity. But again, if you're a straight up day trader, then you may be playing options more than I am. Some of the other criteria that I look at that I think is important, just to kind of give you the nitty gritty of what I look at, it's got to be a chunky trade. Sometimes if it's a trade that I've never seen before and it's a small trade, that may alert me to kind of look at the chart and do a little bit of research. Maybe something interesting is going on there. Texas Instruments is now down, which I thought probably would make sense, by the way, given their numbers. Well, their numbers were not good for Texas Instruments. I don't know why they got such a pop. But anyway, some of the criteria that I look at is sometimes if it's a name that I haven't seen before, sometimes I like to see repeat activity. Like if we've seen call buying 2 or 3 days in a row, like this name, what is it, MDB? We've seen option activity. Again, look at the small. I mean, it's not a big name. It's a small cap name. But somebody's been buying it. And we saw it yesterday too. So that kind of nudges me to maybe try a trade. if we happen to see something a couple times, right? June 165 calls went up yesterday, and then what they buy today? They bought the June 170s today. Again, not huge trades, but so sometimes like if we see 10,000 contracts go up, but it's for 7 cents, that to me there's not enough skin behind it. I'd like to see, at least a 50,000, really like 100,000 in notional. This is 69,000, but I think if you add a couple of them up, you get over $100,000 of premium, right? Because that kind of makes you gives me a little bit more conviction when I see somebody is really putting down a decent size premium. If someone's putting down $20,000 of premium, that could be another retail trader, right? So just because it's aggressive and they bought a lot of contracts, what's the dollar amount that they invested? Right? So if it's a really small trade, I don't pay much attention to it. Or at least won't go into my decision process. Okay, so probably now it's a lot that we went over so far. Yeah, I don't know with Micron. I haven't really been trading Micron. Um, I'm more interested in like the companies that make the chips that are like the cutting edge chips, like Xilinx and some of the ones that are making the 5G stuff. So again, this is a personal preference. But Micron makes memory chips. They're very like it's highly commoditized, in my opinion. And I'm not an expert on all the chips, but I don't know. It seems like anybody can make these Micron chips. They don't have any differentiation, do they? Now I know Xilinx I think reports tomorrow, is it? But some of these guys do, have their chips are much better than. So yeah, so Micron has just never been a name that I trade that much unless we see all kinds of option activity. Then it kind of puts me into, hey, somebody has done maybe more research than I have and knows something. But I don't know. I don't see a crazy reason to get in that name. Okay, so I've spoken for an hour. Trade size. This is really important, and it kind of goes into. So I call this keeping the balance. But number of positions, especially with option activity, with options. If you have more than 20 names and they're short-term option positions, and if the market continues to go up, then okay, you might be okay. But it's really really difficult, in my opinion, to once you get over 15 positions, especially short-term option positions. If you have a correction day where we're down 1 to 2%, you're gonna get smoked. So it's like keeping the balance. Um, there is a high propensity, I think, as well. I've been quoting some bad things from Twitter. Now, there's some great things to learn from people on Twitter, but everybody seems to love short-term options. I think they're kind of like crack. People get addicted to these things, um, and they don't really know how to use them. I've seen people hold, like I'm talking about right now. Like for me, I won't really. I'll try to keep May uh, exposure down to a bare minimum. So why is that? Someone asked me, why do how come you're not trading any more May options? Because I'm a swing trader. So May options are not for swing trading. If you want to hold overnight and unwind the next day, fine. Or if you want like minimum, or sorry, not minimum, maximum, I would say a couple days. Why? Because the theta decay is so heavy, and I'm not going to bring that up now, but go ahead and Google theta decay, and you should get a map, and you should know that if you're trading short-term options, every day you are swimming against the tide, right? Those have the biggest theta decay, right? So the premium is going to, so meaning if the stock doesn't do anything, so let's say ABC stock is trading at $100, you buy an option that expires in May. Let's say the next 2 days the stock doesn't go anywhere. What happens to your option price? You lose. It may go down to like 80 cents from your initial purchase price of a dollar, because it has big theta decay. And the longer that you hold that option position, and if nothing happens in the stock, it will eventually go to zero if the stock doesn't move. So you got to get. I think it's very important. You got to get a couple things right when you're trading short-term options. You got to get the direction right, obviously, and you got to get the timing right. Very difficult. Somebody asked me the other day. They're like, "What do you think Amazon is going to do this week?" I have no. Yeah, I can make an educated guess, but am I going to put a bunch of money on, data trying to predict? And that's another thing I think there's gets lost on Twitter is people seem to follow people that come out confidently about what they think Amazon is going to do in the next couple of days. Nobody, the sooner that you learn this, the better. Nobody knows. Nobody has a crystal ball. It's just people say it confident, so people want to believe. And I've noticed the people that do this, they're like, well, if it goes below this level, then all bets are off. What they like to say is, if it goes through this level, it's going down. Well, yeah, of course. Or if it goes through this level, if it breaks this level to the upside, it's going higher. Okay, that's no. I won't swear, but you know where I'm going. So anyway, I think short-term options, and again, I've been doing this for a long time. It's very difficult unless you're just trading them as day trades. I still think there's a high level of risk with that. What I've learned to do, and I think there's several really good traders in the room who do this. Like I'll point out Michael, if he likes a trade, he'll always go, like, even if it's for a very short-term trade where he's looking for like a bounce for a couple days, instead of going to this week's options, he always goes to next week, because he gives himself a little bit more tolerance. But I would still know that if you're doing that, you're basically know that you're risking whatever you put in. You have to be okay with a pretty big drawdown if it doesn't go your way. For me, what I like to do a lot of times, even if it's just a couple days that I may own the stock, like Abbott is a good example, right? Why not spend for Abbott? You already get so much leverage with options. I don't think people understand that concept. If you, like, instead of going out to May, I went out to June. Why did I do that? Well, I'm okay spending another $1.50 per contract. It's not going to, you're already getting so much of a benefit by buying the option versus the stock. So rather than spending, like, let's say that you wanted a position of 5 contracts, sorry, 500 shares. The capital commitment on that would be, what, about $38,000? Is that right? So it's $38,000, right? So you're getting such a deal, I think, for going out and buying options, which every contract is equivalent to 100 shares, provided that the delta is 1. So if you're buying at the money calls, then your delta is basically about 50. So you're buying one contract, you're essentially owning around 50 shares. So you're already getting a pretty good deal. There's no reason that, because of course Abbott could have went down to the 200-day moving average, and I can add to that June position. Again, that's not even that long of a position, but I think I went out DRI, I went out to July. I want to have that flexibility that I can add to it, not where, and I'll give you a bad example, right? Right, I was in a May call position, and again, I size these all appropriately. But I was in a May position in XBI looking for a breakout, which obviously we know what happened here. That didn't happen, right? But because I'm in a May position and the contract was like $1.20, the contract price went all the way down to 20 cents. So I'm not going to be able to make that position back. I mean, unless it does something super crazy to the upside. But the probability of that May position coming back is so much smaller than if I would have went out to, let's say, July. If I would have went out to July, now I would have lost a lot in premium, but you still have all of July for XBI to get back to where it was versus, a couple weeks, which you're lowering the probability decently. that you're going to if you again, I talked about like if you have a drop in the overall market by 1 or 2%, but this XBI fell out of bed. All of that option is, it's so hard to make that work for you, that those May options, because there's just not enough time on them. So I always try to go out a little bit further, and you'll, so instead of me going out, even though if it's like the Abbott trade was what, 2 days, I would rather, I don't know that it's going to work right off the bat. Do I think it has a good chance? Sure, but I don't have a crystal ball, and I want the ability to add more if it happened to dip a little bit lower. Right? So scaling in is really important. So I never ever really put on a full size position in the beginning of a trade with options, because there's so many things that could happen, that could just blow you up, or blow your trade up. So if so maximum, I think somebody asked me about position size. So sometimes for swing trades, I'll get up to $5,000 or $6,000, but I'll usually start with like a $2,000, $2,500 position, knowing that I might get up to 6,000, but it might be two more entries, for the most part. Unless it's a short-term catalyst trade where I know I only want to risk $1,500, you know, and that's it basically on the trade, because it's a short-term trade. So again, short-term options, I'm not completely against them. They can give you some really good trades for like catalyst type trades. So if I'm looking for a run into earnings, I've done that for Amazon. I did that for Google a week ago. I cut the option expiration off before the company reports, especially, and I'm not going to get into call spreads, but I think that is a really good way to play short-term options as well. You're really limiting how much you could lose. So again, it's always about how much you could lose first, not how much you could gain. You always want to be looking at, with options, what's my damage going to be if it doesn't work out. And I think beginning traders, what they initially want to capitalize on is, geez, how much can I make this year trading options? Wrong. The right question is, how do I set up the process where I could try to be good at this game and consistently make money? Not, hey, how can I make, X amount of money this year? I think that's very, very challenging. And again, there's nothing like, when you're new in options, you hear about making on Twitter, making huge gains. So of course you're like, hey, how much money can I do? Can I make doing this, trading this style? But it's really after you get some experience, you start to really size your trades based on what's the maximum I could lose per trade. So I trade all of these, right? I mean, you'll see me do these. For the most part, I probably go out a couple months on swing trades, but every once in a while, you'll see me stick on a trade where I'm just looking for a couple weeks. The Netflix trade that I did today was a short-term trade. May 24th. So call spread. So I mentioned how I don't, I really watch my front month exposure, but I will add on some of these short-term spreads, right? Because I think those where I'm looking for a target in a chart and a short-term move, I think it's a great way to design a trade. Then finally, equities. So I also mix in equities. Someone asked me today, why did I trade JD via stock? Because JD is usually a slow mover. So I'm either going to go and purchase like January options for JD, but it just is a slow grinder. I also have it's also very hard to use a defined chart support level in an option, right? Because sometimes by the time it breaks the support level in the chart, your option, maybe you purchased an option for $1.50 and now it's marking at 70 cents and it broke support. So you're going to stop yourself out for more than a 50% loss. In this stock, it's so much easier. If it happens to break below 29 bucks, where's it trading now? 29.78, so 78 cents. If it breaks that support in the stock position, I lose less than 3%. if it breaks support, and let's say it was a short-term option position, I could lose over 50% of my capital just like that. All right, so big difference, and these are all things that you should try to think about. Again, you have all these different tools in your toolbox: short-term options, medium-term options, leaps, stock itself. There's one for different. The other reason why sometimes I trade stock is sometimes it's a very high implied volatility name. People don't realize that. Some traders don't even look at implied volatility. Well, you're spending, some of these names, the implied volatility could be a 70, right? So that's all the fluff that's in the stock. What percentage do I put in an individual position? Usually around, I try not to really get over 2% of my capital. I think that's important too. Somebody asked me about that the other day too. And yeah, I mean, so if you read books, I mean, I don't just pull these numbers out of a hat. If you read things like Market Wizards, you spend some time and read some of these books. They've helped me tremendously. But there's a number of really good books. This one's also pretty good. If you go into books, here I'm trying to think of a book, and I know we've got them in here. Do, 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 do. I actually have not read this one. I'm going to try to read that one. It's good, but it's really good to spend some time rather than just follow Twitter. This is a really good book. Secrets for Profiting in Bull and Bear Markets. I like this book a lot. That's a good one too. But if you're not investing the time to read a couple of these books, now half of them you can get on audio, but they are so much better than trying to follow someone on Twitter. You really don't get any good practices. But yeah, generally 1 to 2% is a pretty standard rule of your capital. This way you can't really get too hurt because again, I know everybody likes to talk about winners, but you're going to have losers too. It's just a matter of trading. And how you limit those losers so that they're small is how you make or break it in this trading game. I mentioned, and I'll give another portfolio review, but if you've been a member for a while, I gave a whole performance review at the end of the quarter, at the end of March. And I mentioned one of the keys I went through, which I think is very important for you to do this monthly and quarterly. Go through and look at what the positions where you made the most money and where you lost the most amount of money. And one of the things that helped me a lot, now again, the market has been in a great market path since the beginning of the year, but I had no big losers. None. I had, probably about, I don't know how many names, 5 names that were all where I lost money, but it was all like, minuscule. I think the biggest loser that I had all year long was in this, I mentioned this name, this KL. I kept it on for a little bit longer. I had a stock position. Wasn't even an option position. But I kept it on for a little bit too long. I think that's my biggest loser of the year. But again, paper cuts. You want paper cuts. You don't want to. Again, that's by the best traders out there. You have to learn to manage the losers. The winners, sure, you want to be able to max. No, you don't. You don't put all your capital to work. So how many positions? So let's go over that too, because we glossed over that. So again, everything that we're doing tonight is for information purposes only. I'm not giving anybody advice, but 50 positions, you're crazy. You don't want to risk all of your money in the market. So maximum positions for me, and you could go through my position sheet. I've got about 15 positions. And I don't like to keep it any more than that. I want to make sure that I'm recycling. But if you notice, like some of these, which I got out of Twitter yesterday, which, hey, listen, that's just a rule, by the way. I never hold these swing positions into earnings. But some of these, I have an alert set in E-Trade, and it's kind of set it and forget it with these. The options you really have to keep an eye on. And I've got a couple more I've got a couple stragglers out there that are not on the sheet, but but any more than this, I think Kramer's on right now. Like any more than 15, like if you don't have a staff under you, any more than 20 is like really difficult to manage. But you could do that more in stocks. Like you could have 20 stock positions on. You may not be able to manage them great, but you have no, major. Again, you can manage them a lot better because you could set stock alerts, which you should still do for option positions. But the problem is that, you know, it's very difficult to kind of catch all of them if the market has a deep correction. The shorter that you go in maturity, the more difficult it is to get out safely. But yeah, you could see I've got a mix on here. I've had EM now on since for January, which the position just I've already taken the majority of the profits in this trade. I'm just trying to ride a winner. And that's the right way to do it. You put on a January position where the theta decay is not big. EFA is another trade where I hit one target. I've had this one on since March. Again, I've got the right maturity on. It's September. Right? I can hold those for a while. Right? So I've got a mix of options. I've got a mix of maturities depending on how long I want to own. Like EEM, I think is a bigger trend. So, you know, I may eventually get out of this, but I would like to see it try to get, and I update these positions. This is a long way up here, but maybe at least 45, 46 is where I'd like to take that position off. EFA, I would like this thing to get up to this first VPOC. So it's playing patience and making sure that you've got the right maturity on in the option position. Or if you think it's going to take longer than you think, switch it to stock. But yeah, the number of positions, I even think less than 10 for options is better. Again, as long as you've got them out and they're not short-term options. I don't think the first one was 14 cents. Exit one. So no, that's not right. First target was 245. So yeah, I mean, the other thing is people don't compute this. They want to try to get doubles and triples. What's the profit target? 245 minus 218. It's 12%. It's a 12% profit target. You're telling me that if you make 12% in one day, that's not, again, that's a small target, but let's say, the second target was what, 270? What's 270 minus 218 divided by 218? So that's 25%. You're telling me 25% and what? Like, so I don't think people sometimes compute these things. They're looking for doubles and triples. Doubles and triples are really difficult. I'll get a double and triple every now and then. Did that with that earnings trade last week, or some swing trades. I'll try to hold on, and especially how I structure the call spreads. But you're telling me 25% isn't good in one day? I mean, that's the beauty of options. You get a 20. I mean, it's much different than holding the stock, right? If you're holding the stock, right? And then what? We took this one off. So at the end of the day, I took my last two targets at $3. So it's about a 40% profits for half the trade in one day. Or 2 days. When I put this, I must have put this on Thursday. 2 days, 40%. You're telling me that's not good? I don't know. Again, I would love to get a double, but I'm just telling you, So here's the thing, right? We looked at. So why did I take this trade off? Because a couple more names report in this group, which may influence it. But you get 40% profits in 2 days. that's a winner. I'm sorry, but sure, I could keep the last piece on, maybe trying to get up to the 50-day moving average. But what happens if it checks back? Which I, could think that that's reasonable. It's a June trade. If I was in January, right? If I was in January options in Abbott, then I would say, hey, I'm going to give this thing a shot to maybe get back up to bottom of value, point of control, right? But what could happen tomorrow with this market as overbought as it is? It could come right back to 74. What happens if this? What happens in my June option if this stock comes back to 74? Probably the option price would go back to, you know, $2, maybe less, maybe $1.80, $1.70. So that's the risk that you're dealing with. Either take a 45%, take the trade off for 45% profits in 2 days, and maybe look to do something else. Maybe look to, and it's not like I don't like this name. If it happens to dip back and does like a W pattern, then I'll put a new trade on for Abbott because I like this name a lot. But June is still short-term options, in my opinion. So, you know, my saying is they don't age. Like short-term options do not age like a fine wine. Now, if this thing goes up another 2%, yeah, I'll be, oh geez, well I could have gotten, you know, I could have maybe sold those for 340 rather than $3. But I'm telling you, 40% profits in 2 days. I think options, just realizing how they work, I'm perfectly happy with going on to the next trade after 45% profits in 2 days. And the total trade, right? That was the last half of it. But overall, probably made 30% on that trade in 2 days. I don't know how you can't be happy with 30% in 2 days. Sorry to really hammer the point home, but you know, it's really difficult, I think, to to get doubles and triples. And I know people flaunt them on Twitter, but and I'll tell you, there's one guy I know who does this. He doesn't show any entry price. He just goes after the fact. So it would be like me looking at Abbott tomorrow after, or in a week later saying, "Oh, look at this. I said to get in at $2 and it's at $12." Well, you had to sit with a lot of risk. So you'll never see me do that either. All right, any questions? I know that's a lot to cover for, these webinars should be 45 minutes, but it's really difficult. It by both. So that's a great question. I always get that question. I like to do it like mechanically to start with, very rough. So like 15% profit targets, 1-5, or 20, 20, 20, and then hold the last piece. But it's all about the market conditions, right? You'll never see me be super rigid on that because, it all depends on what the market is doing. Looking at the Qs, I hate to say it, and I'm not trying to be Debbie Downer, but an 80 RSI, do you think, I mean, honestly, do you guys think that we're going to get more overbought? We're going to go to a 90 RSI? What do you think is going to happen here? There's, I don't have a crystal ball, but I don't want to be greedy up here. So yeah, I mean, I would love it. I still have, you see my position sheet. You see I still have positions on, but I want to be coming out of these positions into strength. Because again, we have all these names reporting. You've got a whole bunch of unknown. I don't think this market is appropriately pricing risk in. I really don't. Do I ever go short or buy puts in a down? Yeah. So normally, if the market is starting to trend down, yeah. I mean, you just haven't seen me buy puts in a while. I usually buy puts to hedge. I usually buy puts in indices to hedge, and I don't think here's a bad place. You're kind of trying to pick the top, but you know, to hedge part of your portfolio, like an insurance policy, right? I mean, I don't really look to collect on the insurance policy, but I think up here it's good to have a little bit of of a hedge on. So buying Q's puts, I don't think is a bad idea here because we're really extended, I think, at this point. But yeah, I mean, we could continue to do this. When was the last time? Right, last time we got overbought up here. I mean, we were overbought on this day, and we managed to go up a little bit further before this happened. Again, I'm not saying that this is going to happen, but I don't know. You're kind of just messing with being greedy by putting on any new positions, sizable new positions with this market that's overbought. And that's just my opinion. Anybody think differently? Anybody have any other opinion about that? Thank you guys for listening. It's been, I'm almost going on for 2 hours. So, I'll try to do these. I think this is a good opening one to do. I would like to do one of these like it's tough to do one every week, but at least every 2 weeks, more Q&A. But this way, I think you guys will get an understanding. I'm going to stop the recording now.